As 2025 drew to a close, the City of London buzzed with anticipation. Investors, analysts, and everyday citizens alike watched the markets with bated breath, wondering what surprises the new year might bring. The London stock market delivered a stunning New Year's surprise, sending shockwaves through the financial world and igniting a sense of excitement not seen in years. The FTSE 100 didn't just edge up, it soared to a record 9,940.7 points, smashing through previous highs and marking its first new peak in nearly 2 months. The rally was swift, dramatic, and caught even seasoned market watchers off guard. This surge wasn't limited to the giants. The FTSE 250, a key gauge of the UK's domestic economy, also climbed, closing up 0.7%. The momentum was broad-based, with gains seen across a wide range of sectors. When both large and mid-sized companies rally together, it signals broad market strength. It's a sign that confidence is returning not just to the blue-chip titans, but to the backbone of the UK economy as well. The FTSE 100's 21% gain in 2025 marked its best year since 2009, and its 5th consecutive annual rise. This remarkable run reflected not only strong corporate earnings, but also renewed faith in the UK's economic prospects. This outpaced the stock's 600's 16.8%, making the UK a standout performer among European markets. Investors across the continent took notice, as London reasserted its place as a global financial powerhouse. The FTSE even surpassed the S&P 500's 17.3%, a clear sign of the UK market's resurgence. For years, the US had dominated headlines, but now, the spotlight shifted back to London. For years, analysts overlooked the UK, but 2025 proved its resilience and value in a global portfolio. Investors who stayed the course were handsomely rewarded, while skeptics were left rethinking their strategies. This is a reminder: never count out a quality market. The UK's fundamentals, from world-class companies to innovative industries, have always been strong, even when sentiment wavered. The lesson? Long-term, disciplined investing pays off. Those who remained patient and focused on fundamentals saw their portfolios grow, proving that time in the market beats timing the market. You can't time the market, but you can be in it. Staying invested through ups and downs is what ultimately builds wealth and financial security. The FTSE's performance set the tone for a new era of investor optimism. As the sun rose over London, a renewed sense of possibility filled the air, inspiring both seasoned professionals and new investors alike. Are you ready to seize the opportunity? The next chapter in the UK market story is just beginning, and those who act with conviction may find themselves at the forefront of a historic financial renaissance. What powered this rally? The answer lies in the very foundation of the UK's stock market. While many investors look to tech or consumer stocks for growth, the FTSE 100 has always had a different engine driving its performance. Commodity-linked stocks were the engine. These companies, deeply tied to the world's demand for raw materials, often move in sync with global economic cycles. The FTSE 100 is packed with mining and energy giants, and as metal and oil prices rebounded, so did their shares. These firms are global players, exporting resources to every corner of the world. The Industrial Metal Miners Index rose 2%, with Glencore, Anglo American, and Rio Tinto all gaining between 1.3% and 2.5%. These aren't just numbers. They reflect billions in market value shifting in a matter of days. This wasn't isolated. There was a sector-wide lift as metals like gold, silver, and copper surged. Precious and industrial metals alike saw renewed interest as investors sought safe havens and growth opportunities. Investors rushed back, betting on higher profits for these commodity titans. The anticipation of rising demand and limited supply created a perfect storm for share prices to climb. The FTSE's heavy exposure to materials and energy can be a drag in downturns, but when the cycle turns, it's a major advantage. This unique structure means the index can outperform global peers when commodities are hot. This rally was a textbook case of how global demand for raw materials can supercharge the UK market. As economies reopened and infrastructure projects ramped up, the need for metals and energy soared. The ripple effect was felt far beyond London. From Asia to the Americas, the appetite for resources fed directly into the profits of UK-listed giants. Diversification across sectors is key. Don't put all your eggs in one basket. The FTSE's mix of industries helps cushion shocks and capture opportunities. The FTSE's unique makeup allowed it to benefit directly from the global commodities boom. Few other major indices are so closely tied to the world's resource flows. When commodities rise, so does the FTSE. It's a relationship that's played out time and again, rewarding those who understand the connection. Understanding these dynamics is crucial for smart investing. Recognizing the forces behind market moves can help you make better decisions and spot opportunities early. The lesson: know what drives your market. In the UK, commodities are more than just a footnote. They're often the headline story. Within the commodities surge, precious metal miners stood out. The precious metal miners index soared 4.3% in a single session, as investors flocked to gold and silver. Fresnillo led the way, jumping 6.8%, a huge move for a large-cap stock. Rising gold and silver prices directly boosted miners' profit outlooks, making their shares highly sensitive to commodity swings. Investors often turn to gold when anticipating interest rate cuts or economic uncertainty. The rally in precious metals was both a safe haven play and a bet on future monetary policy. The message: follow the money, and right now, it's flowing into gold. Are you positioned for the next move? The FTSE's rally wasn't just about miners. Energy giants Shell and BP played a key role. Both saw shares rise nearly 1% as oil prices climbed, providing a solid foundation for the index. Even modest gains from these massive companies have a big impact. Higher oil prices mean bigger profits for energy majors, and investors took notice. The FTSE's global reach means it benefits from worldwide trends, not just UK news. Holding shares in Shell or BP is a bet on global energy demand, a powerful long-term force. The energy sector's steady performance added depth and stability to the rally. Diversification into global sectors is a smart move. The FTSE's strength lies in its international exposure. Beyond commodities, UK banks fueled the FTSE's record run. Major banks like HSBC, Barclays, Lloyds, and Standard Chartered all posted gains of up to 1.6%. This sector-wide rally signaled renewed optimism for the UK economy in 2026. Banks thrive when loan demand rises and defaults fall, signs of a healthy economy. The Bank of England's rate cuts created a sweet spot for lending and profitability. Investors saw value in UK banks, which had lagged global peers and now looked like bargains. The rally corrected undervaluation and recognized strong fundamentals. Spotting value where others see risk is key. The financial sector's strength was a major driver of the FTSE's new high. Are you ready to spot the next opportunity? The Bank of England's actions were central to the FTSE's surge. 4 rate cuts in 2025, including one in December, sent a clear signal support for growth. Lower rates made borrowing cheaper, encouraging investment and spending. Investors saw this as proactive management, not desperation. Low rates boost stock valuations and make equities more attractive than bonds. The bank also signaled a slower pace of future cuts, balancing stimulus with caution. This reassured markets: no runaway inflation, no panic. The result? A perfect recipe for investor confidence. Good policy creates good markets. The FTSE's rally was built on both fundamentals and smart central banking. Are you watching the right signals? There's important context. The FTSE's record came during thin holiday trading. With many traders on break, trading volume dropped to just 343 million shares, 80% below the recent average. Low volume can amplify price moves, making rallies look bigger than they might be on normal days. A record is still a record, but caution is warranted. Thin trading means fewer participants, so moves may not reflect broad consensus. The real test will come when full trading resumes in January. Think of it as a small boat moving quickly on a calm lake. Wait to see if it can handle the waves. The optimism was real, but the volume was light. Will the FTSE hold its gains when the big players return? Company news also shaped the day, most notably, Ocado. Ocado's shares edged up after it ended exclusivity with key partners, opening new growth opportunities. This move lets Ocado sell its technology to more retailers, expanding its market. The market's positive reaction showed investors value innovation and future potential. The FTSE isn't just old economy giants, it's also home to tech leaders like Ocado. This signals a healthy appetite for growth stories in the UK market. Ocado's news mirrored the broader market, unlocking potential and looking forward. Supportive policy, rising commodities, and innovation created a perfect storm of optimism. Every story, big or small, added to the FTSE's record close. As we close a stellar year for UK stocks, the key question is, are you ready for 2026? The financial landscape is evolving rapidly, and the decisions you make today could shape your future for years to come. With new opportunities and risks emerging, it's more important than ever to take a proactive approach to your investments. The FTSE 100's momentum, strong fundamentals, and attractive valuations set the stage for the year ahead. UK equities have outperformed expectations, and many analysts believe there's still room for growth. But the market is never static. Staying informed and adaptable is key. Global investors may now look to increase UK exposure, drawn by value and diversification. As international capital flows shift, the UK market could see renewed interest, bringing both opportunities and competition for domestic investors. But don't get complacent. A record high isn't a guarantee. Markets can turn quickly, and past performance doesn't ensure future results. It's crucial to remain vigilant and avoid overconfidence. The market faces new tests: global demand, central bank moves, and the return of normal trading volumes. Geopolitical tensions, inflation, and policy changes could all impact your portfolio's performance in unexpected ways. Stay diversified and prepared for volatility. A well-balanced portfolio can help cushion against shocks and take advantage of new trends as they emerge. Now is the time to review your financial plan and ensure you're positioned for what's next. Reassess your goals, risk tolerance, and time horizon to make sure your strategy aligns with the changing market environment. Did you stay disciplined and reap the rewards, or panic and miss out? Reflect on your decisions this year and learn from them. Consistency and patience are often rewarded in the long run. The FTSE has shown its strength. Have you shown yours? Now is your chance to build on your successes and address any weaknesses in your approach. Get your portfolio ready for the challenges and opportunities of 2026. The future belongs to those who prepare, so take action now and make sure you're ready to thrive in the years ahead.